Sure.
Okay.
Yeah. So this is a live AMA, and the goal of this webinar is basically to understand what's happening in the decentralized finance space and how that is related to the current finance space. So basically, going through over that, we're not gonna go like in a very detail on specific subjects, and this could be also starting from like individuals who has no idea about crypto up to people like who understands crypto very well. So yeah, I think first, yeah, we will do an introduction, and maybe Kory, you want to get started what you do and what you've been doing in the space, and then after that we can answer the questions we already have. So yeah, thank you everyone for attending. I appreciate that. You're on mute, I guess.
I was just telling myself not to do that in my belly. Thanks, Matthias, for organizing this and inviting me, and thanks everyone else for taking participation in this. So I'm Kory. I'm the CEO of Stably. We are a Seattle-based fintech company that specializes in asset tokenization. We tokenize the US dollar as a stablecoin called USDS. And right now we're working with a lot of enterprise clients all over the world to tokenize various other assets, ranging from precious metal like gold, silver, palladium, rhodium, to real estate in Southeast Asia, to other foreign currencies, etc. And we also offer a borderless account called Stably Prime, which we are seeking to white label out to people who are interested to work with us, such as Matthias, which is one of the people we're actually talking to so far. It is an account that is able to support both fiat and crypto, and you can use it to send money or receive money to and from anyone in the world. So that's a quick summary about Stably. Oh, and next year we're hoping to get a Washington State trust charter to officially become a regulated trust company in Washington State.
Awesome, thank you. Freda, you wanna go next?
Hey, Matthias, thank you, Fred. So I'm at Metal, and we have the Metal Pay wallet, and we also have the Proton wallet and blockchain. And so our goal really is to figure out how to democratize all this stuff and make it accessible to average people. I've been a big critic of ETH 1.0 in that it's difficult to use, high fees, bad consumer experience, I would say. And I think the real thing for me is, and I don't think I found this yet, but I think the question is, how can we make all this stuff useful to the average consumer to where, it's not tens of thousands of daily active users on blockchain, but, tens of millions. And so how do we get there? I spent a lot of time in the EOS world. EOS had some good ideas. The execution was not great in some ways. Still to this day, you cannot actually get a free EOS account. The sort of the best desktop wallet right now that's still operating on EOS is Anchor, and they don't offer accounts. You have to have an account to get to use the wallet. So that's kind of where I look at a lot of this stuff, and so I'm really interested in how do we take the ideas of DeFi, the game of DeFi, and how do we make it accessible to people who aren't whales, who don't have who don't want to pay $10 transaction fees, they might want to earn 5 to 10% on their money on $2,000, right? And so you can't play right now in DeFi in this world. That's what interests me. So that's where I kind of.
Sure, thank you, Ethan.
Hey everybody, my name is Ethan Kravitz, and I'm one of the founders and partners at AGE, which is a multi-strategy digital asset hedge fund. We are coming up on being in business for a little under 3 years, and we invest in kind of a variety of strategies with an all-weather approach to the crypto markets. We do everything from traditional long-short trades to arbitrage to various forms of income generation, as we used to call it, back when it was just operating nodes or staking. Now we're more heavily into operating validators, as well as what everyone is now calling yield farming. My background is in software and computer engineering, and have a pretty solid technical understanding of the various kind of components of the blockchain space, Ethereum related ecosystems specifically. And so, we're pretty comfortable making investments or taking activities that involve interacting with smart contracts and the various protocols. We've always had a pretty strong focus on the intersection of distributed computing and financial products. We've invested in a lot of centralized exchanges and centralized financial products as well, but DeFi, before it was a hot thing, was always something that we were pretty heavily involved in, and we invested in some of the earliest protocols for derivatives on chain, and some of the kind of early attempts at consumerizing stablecoin transmission as well. And so we've been around the block for a while, and for me, I'm pretty excited to see, where things are now and where things are progressing.
Okay, thank you. Miko?
Yeah, so I'm an investor in the space. Unlike Ethan, I'm not sort of kind of in the multi-strategy. We're really much in the venture area. So, I'm an investor with Gumi Crypto's capital. We do invest in early stage projects in DeFi, and also in all kinds of blockchain and cryptographic asset thesis ventures. I'm also a co-founder with Evercoin, which is a wallet based exchange. So, it's basically non-custodial done right, and custody done right. So, we do integrate a unique cold storage module with the integration of the YubiKey. And, if you don't have a YubiKey, you should have one. It's a great piece of hardware. But aside from that, I think my lens around the DeFi space is really that, all of this financial energy is really looking to expand, and it's looking for, meaningful work to do. And the energy is kind of being applied to a lot of replicating what's previously existing in centralized financial systems, right? So, a lot of this is really just, I think, the warm-up round, because obviously, to me, like, having financial infrastructure is great, but you really have to have some kind of economic impact, and some kind of fundamental proposition. You have to have projects to finance that, do more than just spin money around. So, I think DeFi is definitely incredibly exciting and promising. And, we are building kind of a financial infrastructure for this decentralized future.
Okay, wonderful. Yeah, thank you, everybody. So I think what I would do is I would start with one of my questions I have is, do you guys see everything happening in Wall Street, or something like the current financial system? Do you guys see everything transformed into the decentralized finance space, or only a few of the industries are going to be moving here? That's my question. So anybody want to answer that? Kory, you're on mute. I think I heard you. What were you saying?
I literally asked, can everyone hear me? And sure enough, I'm on mute. All right. Yeah, I can answer that question there. So I think not every single financial service is going to be moved on chain, because a lot of financial services are necessary, need to be moved on chain. For example, custody of real life assets, right? If you have a stablecoin or asset-backed token that's backed by something physical in real life, you need to have some sort of regulated trustee or custodian taking custody of that asset for the benefit of the token holders or the beneficiary, right? That is something that is very difficult to move on chain, and I have yet to see any good solution for that particular problem. But most other aspects, I have, we're starting to see them move on chain. Various aspects of financial services like exchanges, lending, which I actually don't like to call them lending because there's, they still require collateral. So it's more like a pawn shop to me than lending right now. So we have lending, quote unquote, lending protocols. We have aggregators like Wire now. We have exchanges, decentralized exchanges that optimize for stable coins, of course, similar to foreign exchange in real life, and insurance services, for example, from Nexus Mutual, asset management from Set Protocol. So we're starting to see a lot of a lot of these financial services in real life being moved on chain. And yeah, I think the free market is just going to do its job and start experimenting with more and more of these projects.
Okay, yeah, that totally makes sense. And like when we see, for example, like in Wall Street, like a lot of these financial instruments that happen, they're not like very transparent to the public. And what we're seeing now in crypto space is, a lot of things are public. But for example, one thing I've seen from, let's say, recent like DeFi farming, even if a lot of things are public, if you don't read the smart contracts, basically like you don't understand like what's happening. So the fact that it's public, do you think that means everybody's gonna understand, or are they gonna take like advantage of the public infrastructure? That's another question I had. And yeah, anybody can answer it. It doesn't have to be Kory. But
I think you bring up a good point there, that I think it's a benefit that these things are public, but most people won't still go deep enough into the diligence to really take advantage of that. Right. I mean, people like to make a lot of social proof assumptions and different types of kind of take different assurances. Even the fact that something being open source, people assume that it's safer and it's had more scrutiny, but 99% of these people will never actually read the source code, nor would they understand how to. So you're still kind of looking at the kind of high level characteristics of this. I think we've heard some of this debate about different kinds of derivative securities, mortgage-backed securities and things like that, and people saying, well, we're recreating this on the blockchain now and this is a bad thing. And then the other people say, well, but if these credit default swaps of the last crash were on the blockchain and transparent, people would have been able to see that all these mortgages were garbage. I think there's two sides to that coin, and how many people would look into it is debatable. But the ability for anyone all over the world to have that opportunity to scrutinize it, I think certainly does help. And we've seen certain collective commons things like Wikipedia and all sorts of other blockchain projects that somebody probably would for fun sit at home and scan through all these mortgages and find out there's pockets of fraud here and there because people are interesting like that. I think the other component that is interesting though is that blockchains are going to move towards more and more privacy. So we shouldn't assume that public traceability is a fundamental component of a blockchain, right? One of the reasons that more business isn't currently done on a blockchain is because of lack of privacy. And if you look at what JP Morgan or these other people who are working with, enterprise versions of Ethereum are doing, is they're saying, well, we need to put encryption and ZK snarks into the blockchain before we're ever going to, do business here. We're not going to let everyone know that we just sent $1 billion from bank A to bank B. So yeah, I think one of the improvements being made to blockchains is adding privacy. And so I just think it's important to point out that we shouldn't assume that everything will be 100% transparent going forward.
got it. And when we are talking about more about privacy, are we assuming there's this idea where, okay, individual persons should have their own privacy, but bigger entities or, maybe government entities, they should have, a lot of things public. So for example, they say, if you pay, I don't know, if you pay your taxes, are those things going to be public in a sense where your tax money is being spent? Do you guys see that kind of thing happening in the future where, bigger companies who has much more bigger responsibility than an individual, would they, do you think we will be going to a direction where it doesn't have to be their transaction, but whatever happens on their business, do you think that would be the case in the future where their information becomes much more public?
I find that unlikely in Western capitalism, that the market would demand that. Maybe nonprofits, yes, that would be great. Governments, yes, I think at the municipal and city and state levels, there's a push to make more transparency there. I know centralized solutions to that, like OpenGov and other software providers that give governments the tools to kind of make their budgets more transparent and stuff like that. And I think that we will hopefully see a push of more of that, but I personally find it unlikely that every private company would move in that direction. But if certain B Corps or people who want to do that voluntarily because they feel it gives them a competitive advantage, like if they say, hey, we're a brand built around trust and transparency, like that's something that resonates with customers and that can help you be competitive and succeed, then I think blockchain could be a great tool for enabling those who want to do that to do that.
Okay, got it. That makes sense. Thank you, Ethan. Sure. So I think moving to the next question I have is, which is more of like, decentralized finance. So it says, has DeFi lost its way? If so, what way is it on right now? And are the current like APIs we see in farming, like, are they going to be sustainable? Especially like, you see something like it has like 2000% API, but the next day things change. And are they going to probably like, come close to more of like, for example, like when you do staking rewards, like, and you get paid like 7-8%, that kind of seems like much more practical compared to like 1000% API. Want to hear about that. Maybe Fred, if you have any ideas, or Miko.
Yeah. So I think when I first saw this stuff, I was very I basically thought of the Madoff Ponzi schemes. And I think there is, I've heard the word Ponzi-nomics as kind of like a kind of version of tokenomics that a lot of these guys are doing. And I think, I think part of it is an art, it's an art, the art of Ponzi-nomics, You have to create your DeFi tokens in a way that you want to, get a lot of people on board initially and steal liquidity from other people. But at the end of the day, I do see some things that are very likely to persist and generating high yields. And the thing I think is that basically DeFi allows not just people to participate in the lending market, right? The pawn shop market, really, as Kory would say. But and by the way, pawn shops have high yields. Remember that, right? If you go to a pawn shop, you get a really good. You take a Rolex watch and you pawn it. It's a double-digit return, right? So, I think double-digit returns for Rolex watches, guns, and Bitcoin are all going to stay for a long time. So I think there are going to be pretty good returns for those things. I think if you say to somebody, I'm going to give you access to 10-to-1 leverage Bitcoin, but I'm going to give you 100-to-1 leverage Bitcoin, right? Yeah. But you can't sell it. It's got to stay in here, and if it hits this trigger, you're done, right? That's a pretty. There's a lot of juice there. A lot of people will pay a lot of money on an interest rate to have that, to have that percentage. And I think what these protocols are doing is they're democratizing that, right? So instead of the money going to Coinbase or going to Binance, it's basically going to all the liquidity pools, right? And on top of it, it's going to the early liquidity pools, right? In the case of like SushiSwap, right? So the guys who come in early, they're the Series A liquidity pools, and they're getting in at a discount to the Series B liquidity pool and the Series C liquidity pool. So I do think that the model is pretty sustainable in that way. I think it's a way of giving people equity, which is sort of these LP tokens are sort of equity, really, as opposed to just interest, right? And so I think the combination of that equity and interest is probably going to be a longer term thing. So I don't think it's lost its way. I think it's actually found its way. I think you could argue that it's probably a really good way to go, right? For a lot of these things. And I could sort of see whether you take the insurance, product, whether you take these decentralized AMMs, whatever your model is, there always is an opportunity to say, oh, I'm going to give a bunch of tokens at a super early preferred rate to the first people who come in. I'm going to give less to the people after them, right? Because, the stuff's now established. I don't need you as much, right? And so it's very similar it's sort of like tokenizing the way VC works, right? And I think, Brock talked about this a long time ago in 2017 when he did the first, blockchain capital, which is the first, ICO really, And, I think now we're finally getting to where these structures are finding their economic merits. So I think a lot of this stuff is super interesting, and I think it's not transitory. So, if I thought it was just a flash in the pan, I think I wouldn't even be spending my time here. But I think there's going to be a lot of stuff still to come. So that's my opinion.
Okay, that makes sense. So one additional thing. Now, let's say, for example, the average borrowing, the average lending rate becomes, they say 10% API per year, which is probably even way 10x than what a bank would provide you. So when this thing goes to mainstream, where people now can deposit their money and much more in an easier way. Right now, it's a little bit complex for average person to come, open MetaMask, do all those things. At that point, do you see people moving their money from banks to stablecoin protocols? And at that point, maybe do you see governments creating their own stablecoins, which is happening, which seems to happen. So that way they don't need that control of keeping retail people's money. How do you guys see that?
Those seem like two separate issues in my mind, but on the first one, I don't think people will move wholesale just because there's a higher yield. I think we've seen that historically not to be the case because people lack the financial education, unfortunately, to even understand or prioritize that, right? If there's been let's call them high yield savings accounts in traditional finance for, I want to say about 15 years now, right? These online only early banks where you would go to ING or some random local or regional bank who got online early. I forget, throughout the years, but when I was very young was going, oh, I can go open this online account and get 2%, 3% versus going to Bank of America and getting 20 basis points on a savings account or 10. It's a joke, right? What the major banks pay you. But most people still keep their money with one of these banks. So why aren't they moving over to these other online banks for 20x, 50x the yield? It's just not a motivating incentive for people, apparently. So I think consumer businesses have to think of other ways to incentivize and gamify. And I know what Fred is working on, they think about this kind of stuff a lot. I think what we see right now in yield farming is kind of a glimmer of that potential, right? People want non-financial or gamified incentives or other types of psychological feedback loops to get them to engage with products. It's not just about where you get the most earnings because it would have already happened. So I think that the various companies that crack the code of how to onboard users into these products through other types of incentives, whether it's tokens, we're seeing a kind of crazy wave right now with NFTs of people are willing to put money into things to earn rare collectibles. And that's kind of, playing on the hype beast kind of culture that exists in, a certain generation now. I think there's more to it than just this has 5% yield. It's unfortunate in a sense because that yield is game changing for people throughout the world compared to what they're getting now. But there's going to be something more than that is kind of the key to moving people over, I think.
One thing I'll push back on that a little bit, Ethan, because one thing I do think is this stuff hasn't been really productized really yet for a mainstream user. Now, yes, yield farming, you can do yield farming, okay? Everybody here can do it. But the average person's not going to do it, right? And so I'll take an example of, an integration which I think is pretty easy, which is if you look at Abra, right? You go there, you put money, you get 10%. I mean, it's very simple, right? You get 10%. It's very simple. You put stable coins there, you get 10%, it's pretty compelling. You know what I mean? You do that a couple months, you see the money come in, you get 1% every month. You're like, why am I not?
Hey,
Lost Fred.
yeah, Fred, we lost.
Fred, oh no.
Okay, I'll ping him on Facebook. Okay, maybe he's not coming. Okay, sure. I think I can maybe go through the next question until he's back.
Okay. Oh, there he is.
Oh, yeah, Fred, you're back now. You're offline for a minute.
I'm sorry. I just think we haven't had, DeFi's not been around enough and it's not been productized enough. If you had the E-Trade high yield DeFi fund and you just put a button and put your money in that, and it's connected to your E-Trade account, I think you're going to have a lot of people go for it. I think.
Yeah, I mean, we've had the traditional finance equivalent of that for a long time, right? And I agree with you. And I tell people all the time, they're like, oh, should I invest in this and try to get 7%? And I'm like, well, you could put your money in BlockFi or Abra or Nexo or whatever and get that right now, 10%. And they're like, what, really? But then it's like, oh, okay, but it's not FDIC insured. And how do I do it? And yeah, we'll make it easier and lower the steps. I just think there's some secret sauce beyond just yields. Because I think we're all just financially minded people who think more in terms of the absolute return, but not everyone seems to think that way. Because Wealthfront and Robinhood and all these people are trying to do this, but we haven't seen it explode, and it could have by now.
I just don't. I'd give it more time. That's the only thing. And
yeah.
I think Celsius is a pretty good example, right? They're over $1 billion in deposits now, right? And there really is no other function on Celsius other than to earn the money. There's no gaming. It's not fun. It's not. You're not doing anything on Celsius other than you're earning your interest, right? So this stuff is picking up in terms of assets under management, definitely. And I think if you go back a year, this stuff that wasn't really, it didn't really exist. So I think that there's, as we go further productized, I mean, the stuff that's coming out of, Yearn, is something that if I tell that to anybody in finance, they go, wait, stop, explain that again. Give it to me again. I want to hear that again. How much money could I deploy at this? Is it, so everybody's like, is this real? What? And they absolutely don't get it yet. You know what I mean? There's a certain amount of I don't believe it. I'm not sure. There's something wrong. What's the risk, et cetera? Nobody knows, right?
Yeah, but these are all finance people.
Yeah.
I mean, I agree. Yeah, I agree. I mean, Aave has over $1 billion in assets also. The opportunity there is huge. It just hasn't reached consumer yet. So.
But I'm just saying it's going to. That's my gut feel is, the demand for yield, once the average person realizes this, it absolutely is going to. And it's also businesses, because I do think that, having run businesses with tens of millions of dollars, and you have these representatives from Wells Fargo and and they don't even have a product to sell you anymore. They're like, well, we have the 0.2% fund for you, Fred.
Yeah, I think that's the opportunity right now. It's
enormous, right?
Businesses for sweep accounts getting multiple percents on their free cash is huge.
It's huge.
Absolutely.
And we don't even have really good wallets for businesses. I don't know if anybody's played with Oxygen. It's pretty great,
Mm-hmm.
Oxygen Financial's great wallet. You can get a bunch of cards for your business and everything. I'm just saying, but we haven't even started really thinking about how does a business sign up for these things. I want to have 20 debit cards for each of my employees. I want to do all my bill pay with this, et cetera, et cetera. So once you start having that, and you say, I'm going to start using stable coins for a lot of my transactions, I'm going to pay people in stable coins, right? And I bet you Kory, I bet you pay people in Vietnam in stablecoins, I'm guessing, right?
Yep.
Tether, there you go. Right. So, but like if all your payroll stuff uses stablecoins, if all your benefits, your 401k, everything is using stablecoins. I mean, that's huge, right? There's just so much room to grow there, I think. And if those stablecoins are earning you 10%,
right, in real time between the time they receive it and the time they spend it, yeah, it's huge. It's changing.
And they can, by the way, they can get paid every day, maybe instead of every, or every hour instead of every 2 weeks. Another.
Yeah. So I wanted to dig in there, right? Because for me, like, there's a couple of ways of looking at yield, right? Like, I think one of the lenses through which we can understand yield is really to look at risk, right? Because the thing that is so interesting about this phenomenon is that the thing that is bizarre becomes like, what if everybody has a money printer, right? So if everybody starts having their own money printer, then they start printing all kinds of things, right? And so then what happens is it becomes this kind of a hall of mirrors, right? Which is everybody's kind of wandering through these mirrors and they're trying to understand, right? So what's happening, I think Andre Cronje said it well, which is he said that like, a lot of it is wealth that's transferring from those who don't know to those who know, right? So part of this kind of DeFi world is kind of a hall of mirrors, and some of it is yield that's just being generated on the backs of people who are just losing, right? Like, and so, there's some of it. I'm not saying all of the yield is just that. It's really, there's also there's also other forces at work here. There's primary velocity, there's disintermediation, there's all kinds of really interesting economic forces at work. But I would say that, some of it is really just, losers losing money to winners.